Or do you want to maximize your tax returns in 2024? It's a question many of us are asking as we navigate the labyrinth of tax deductions. Understanding these deductions is more than just a survival tactic. It's an opportunity. An opportunity to potentially save thousands. An opportunity to make the most of your hard-earned money. So, with the promise of a better financial future, we invite you on this journey of discovery. Stay tuned to discover the top 10 huge tax write-offs for individuals filing in 2024. To start off, let's understand what tax write-offs are. Essentially, tax write-offs or deductions are expenses that you can subtract from your taxable income. They work by reducing the amount of income you're taxed on, which can significantly lower your tax bill. Imagine your taxable income as a pie. Each slice represents a portion of your income. Now, imagine that some of these slices are labeled as deductible expenses. These slices are removed from the pie, making it smaller. This smaller pie is your new taxable income. The beauty of tax write-offs is their impact on your taxes. The more deductions you have, the less income you're taxed on, and the lower your tax bill becomes. It's like turning a large pie into a small tart. Now that we understand what tax write-offs are, let's delve into the top 10 for 2024. You're ready to uncover the top 10 tax write-offs for 2024. First on our list is the home office deduction. If you're working from home, a portion of your home's expenses can be written off. This includes mortgage interest or rent, utilities, insurance, and even repairs. To qualify, you must use a part of your home exclusively and regularly for business. Next, we have the vehicle expense deduction. If you use your car for business purposes, you can write off expenses like gas, maintenance, and insurance. You can choose between the standard mileage rate or actual expenses method, depending on which is more beneficial. Thirdly, let's talk about health insurance premiums. If you're self-employed and aren't eligible for an employer-sponsored plan, you can deduct your health, dental, and long-term care insurance premiums for you, your spouse, and dependents. The fourth write-off is student loan interest. Even if you don't itemize your deductions, you can still write off up to $2,500 of the student loan interest you've paid. Fifth, we have the educator expense deduction. If you're a teacher and spend your own money on classroom supplies, you can deduct up to $250 without itemizing. Next, the Savers Credit is a lesser-known write-off that rewards low to moderate income taxpayers who are saving for retirement. If you qualify, you can get a tax credit for up to 50% of the first $2,000 you contribute to a retirement account. Seventh on our list is the Child and Dependent Care Credit. If you pay for daycare so you can work or look for work, you may qualify for a credit of up to 35% of your allowable expenses. The eighth write-off is for charitable donations. If you donate to a qualifying charitable organization, you can write off your contributions. Just remember to keep your receipts. Next, we have the Residential Energy Efficient Property Credit. If you've installed solar panels or other energy-efficient systems in your home, you can get a credit for up to 30% of the cost, including installation. Finally, let's talk about the Lifetime Learning Credit. This credit can help offset the cost of higher education, including courses to acquire or improve job skills. It's worth up to $2,000 per tax return. These tax write-offs can provide significant savings, but it's important to note that they're subject to change and may not apply to everyone. Always consult with a tax professional to understand which deductions and credits you're eligible for. With these tax write-offs in mind, let's explore how to maximize your cash back. Cash back in your pocket sounds good, right? Let's delve straight into the art of maximizing cash back. It's not just about claiming deductions, it's about leveraging the right ones at the right time and understanding your tax bracket. Firstly, let's talk about timing. The tax year runs from January 1st to December 31st, but certain deductions can be made even after the new year. For example, contributions to individual retirement accounts can be deducted if made by mid-April of the following year. Timing your expenses and deductions wisely can make a significant difference to your cash back. Next, understanding your tax bracket is crucial. The United States operates under a progressive tax system, meaning the more you earn, the higher your tax rate. But here's the catch. Not all of your income is taxed at that highest rate. Only the income that falls within each bracket is taxed at the corresponding rate. So, by understanding where your income falls within these brackets, you can better plan your deductions and maximize your cash back. Now, on to deductions. Deductions reduce your taxable income, and the less income you have to tax, the less tax you pay. Simple, right? But it's about leveraging the right deductions. Some of the most impactful individual deductions include home mortgage interest, state and local taxes, and charitable contributions. But remember, not all deductions are for everyone. It's about understanding your personal financial situation and leveraging the deductions that benefit you the most. Lastly, let's not forget about tax credits. Unlike deductions, which reduce your taxable income, tax credits directly reduce your tax bill. Some of the most beneficial tax credits include the Earned Income Tax Credit, the Child Tax Credit, and the American Opportunity Tax Credit. So, there you have it. By timing your deductions, understanding your tax bracket, and leveraging the right deductions and tax credits, you can maximize your cash back and keep more of your hard-earned money. Now that we know how to maximize cash back, let's talk about when to file. Timing is everything, even when filing taxes. It's like a dance where every step counts. The earlier you start preparing your tax return, the better. It gives you ample time to gather all necessary documents, understand the changes in tax laws for the current year, and take advantage of all possible deductions and credits. But don't just focus on preparation. Early filing can mean quicker refunds. Imagine having that extra cash in your pocket sooner rather than later. Now you might be wondering, what if I owe money? If that's the case, filing early still helps. It gives you more time to plan your payment strategy and avoid last-minute stress. And remember, even if you file early, you don't have to pay until the deadline. But be careful, filing too late can lead to penalties. So, balance is key. With the right timing, you're set to file. But how should you fill out your W-4? Filling out your W-4 correctly can make a big difference. It's a simple form, yet it holds the key to your tax withholdings and potentially a more sizable refund. Let's demystify this process. The W-4 form, also known as the Employee's Withholding Certificate, guides your employer on how much federal income tax to withhold from your paycheck. The goal is to get the withholding as close as possible to your actual tax liability. Start by filling out your personal information. Then let's move on to the multiple jobs or working spouse section. If you or your spouse have more than one job, or if both of you work, it's crucial to accurately fill this part to avoid underwithholding. Next up, claim dependents. Remember, each dependent could mean a tax credit, and that's a direct reduction of your tax bill. Be sure to understand the rules surrounding dependents to avoid any missteps. The Other Adjustments section is where you can account for other income deductions and extra withholding. If you have significant non-wage income like interest, dividends, or self-employment income, ensure you fill this out. The goal here isn't necessarily to get a big refund. It's about not owing a lot or getting a huge refund. Both indicate that your withholdings are off, and that means your money isn't working as efficiently as it could be throughout the year. Understanding your W-4 and these tax write-offs puts you in control of your tax returns. So, take the time, fill it out correctly, and let your money work smarter, not harder. You've gained valuable insights today. We've journeyed through the realm of tax write-offs, unveiling the top 10 substantial deductions for individual filers in 2024. We've explored the art of maximizing cash back, delving into the techniques that can put more money back into your pocket. Timing, as we discovered, can be a powerful ally in the tax filing process, and we've illuminated the best times to file. Additionally, we've demystified the W-4 form, revealing what to put down for the greatest cash back. So, armed with this knowledge, you're now better equipped to navigate the tax season with confidence. Remember, these tips aren't just about saving money, they're about empowering you to take control of your financial future. So, why wait? Start planning your tax strategy today. Remember to subscribe and join our 10 Billion Club for more financial insights. Make your 2024 tax returns work for you.